I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be on the show.
Home Capital. What is happening there? Apparently, some executives have been accused of lying to their clients and all kinds of runs on their capital. Are they going to fall apart, and should people who are invested there worry about it?
Yeah, they definitely should worry. Now, the stock has come down from, I think, a high of in the last couple of years at $57, and at the close today, on May the 3rd, it's under $7. It's closing here a little bit below $7. So at that price, if you believe the financial statements that the company has put out, that would make it a very cheap stock, because the way banks and other lenders are usually measured is by book value. And the latest reports were around $25 for book value. So at $6.84, that's unheard of to be trading at like a quarter of book value. However, nobody believes the book value. So, because what's happened, there's a lot's happened in the last couple of years, but just the very highlights are they uncovered fraud in some of their applications for mortgages. So they're what's called an alternative lender, which means their business plan is they will lend mortgage money to people who have been turned down by the banks. And of course, as we all know, the banks don't turn down very much. So that means you're looking at a group of people that have been turned down that maybe don't have the employment record, don't have the income record, maybe they've been through a bankruptcy, or all kinds of possibilities. Anyway, there's some problem, and that's who they lend to. So already you should be a little bit worried about a lender like that. But they've had a run of 31 years where they've been very successful. So, but what happened a couple of years ago was somebody alerted them to the possibility that the applications were fraudulent, and the main area of fraud is lying about jobs or income. So it turned out they weren't verifying income by a quick phone call to say, does that person actually work for you? And they're claiming $100,000 income. Does that sound about right for that particular position? And they weren't doing that. And it's not, amazingly, it's not required. So where the issue came with Ontario Securities Commission was they discovered this. They started an internal investigation, but they went through at least two interactions with the public in the stock market without announcing that this was going on. And this would be considered what they call a material fact, and they should have announced it. So it was only 45 mortgage brokers, but they were 45 of the mortgage brokers that gave them the biggest volume of business. So when it finally came out, I'm just going to guess here, about 6 months later, after the company discovered it, the stock dropped quite a bit. So that also proves that it was a material event. Then some time went by, more than a year actually, and nothing really bad happened. So people started to relax about it. But more recently, the Ontario Securities Commission decided, after an investigation, that they would charge the past CEO, the past CEO. They've had several changes, and one other person, three people, with infraction under the securities law, which could be quite serious for them. So that's when the stock really started this downward spiral. And of course, now we're at a point where people are withdrawing their money. So these lenders have to raise their money. That they're not like a bank where they can print money out of thin air. They have to actually raise the money in deposits or some other form before they can lend it out. So this is the problem. They've had massive withdrawals. And then to make it even more colorful and more interesting, to make up for these withdrawals, they went to a pension plan, the Healthcare Workers of Ontario, and secured a $2 billion line of credit, of which they immediately drew $1 billion. And the interest rate is 10%, but there's also some commitment fees and other fees on top of that. So depending on how much they draw, they could pay as much as 22.5% on the borrowing from the Healthcare Workers of Ontario pension. So that's, at that point the stock went down into the single digits, and quite frankly, it might go even lower.
Well, who can pay back 22.5%? It's like they put it on a credit card.
Yeah, I mean, the other thing they've got, which hasn't been mentioned in any of the stories that I've seen, is they also have a $350 million or somewhere in that range debenture, which matures in about 3 weeks on May 24th. So they have to pay out that money, and I'm sure they don't have that money just sitting around in a bank account somewhere. And so they have to borrow that. So that would be, and that interest rate on that loan was probably about 5 or 6%. So they're going from 5 or 6% up to 22%. So when people can get mortgages from different entities at anywhere from 2.25% up to maybe 5 or 6%, depending on, their quality of their credit and everything. A company that's borrowing at 22% is just not going to stay in business very long. And that's the concern. So the total value of Home Capital has gone from maybe a peak of about $2 billion down to about $500 billion now, and $500 million now. And but they owe quite a bit of money, and this new line of credit means that quite likely even that $500 million in value may disappear before this is over. Now, one of the issues is, so that's Home Capital. It's unfortunate for the people that own shares in it. The people that have deposits at Home Capital, they've got a couple of subsidiaries, Home Trust and another one called Oaken, are going to be okay as long as they stay under the $100,000 Canada Deposit Insured limit, which I'm sure most people would. But the problem for the system, and this is quite interesting because we start to broaden it out to a bigger picture, is will it have any ripple effect through the rest of the financial industry? And that's why what happened yesterday and today is interesting as well. So there's another company called Equitable, which is a very similar company to Home Capital. They have the same business plan. In other words, if the bank turns you down and come and see us and we'll lend money to you, and a lot of people got very concerned that they would be in the same boat as Home Capital. So a consortium of 6 banks announced that was finally finalized just today on Wednesday, that they would provide a loan facility for Equitable of $2 billion, the same size, but the conditions are much more reasonable. They're going to be paying interest rates of a little bit above prime kind of thing. So 4 or 5% interest instead of the 22% interest that Home Capital is paying. And I think the reason that was done, I don't think the 6 Canadian banks were jumping up and down to do this for Equitable. I think they did it because people recognized the stability of the financial industry, especially the lending for housing industry, was somewhat at risk, and they didn't want to have it ripple through the whole system.
We'll have more with Hilliard MacBeth right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're chatting with Hilliard MacBeth. One of the things that's been pointed out about the Canadian real estate industry is how their stats lag behind reality. 3 or 4 months. So for 3 or 4 months, they'll be telling you, oh, the market's great, sales are high, we're getting great prices. But in reality, they may not be doing that. And you said in some countries they do something different than what we do here. Well,
there's a couple other ways. So the sale price, you're right. I mean, you think about it, you make your bid, you make your offer, it's accepted by the seller, but the deal doesn't close for a while, and there's a lot of delays and that sort of thing. So you could be 3 months before it actually gets registered with an official like land titles or something, where they could say, well, that house sold for that price. But there are other indicators, and that's why people watch things like new listings. So one of the things that's happening in Toronto, and sort of the opposite to Vancouver, is new listings are absolutely going through the roof. So there was in a couple of months ago in Toronto, in the single family home, which they call detached homes, there were under 3,000 homes for sale, which was probably a record low, although January, February was always kind of slow. And in March it jumped to 9,000, and in April it jumped to 12,000 homes. So the number of homes for sale has gone from something like 3,000 to 12,000 in just 3 months. And this is absolutely, I don't know that this has ever happened before. So that's one indicator that the market might be at a turning point. The other indicator that I've heard people talk about, which makes a lot of sense, and I've seen it in other countries, I think it was the United States, is people could keep track of any changes in the listing price. So you could have a couple of stats. You could have all of the listing prices for all the single family homes of 3 bedrooms, for example, just to pick a number. And you'd get a sense of that, if that was going up or down. Although obviously there'd be differences in the types of homes, but if you took a whole large number of homes, it would be pretty representative. And then even better would be a weekly indicator of any changes in the listing price. So if people were adjusting the prices down, that would be very interesting information to see if there was a change. And then another one that I don't know if you'd be able to collect this. The realtors would have this information, and they certainly use it, I think, themselves. And that is expired listings where people bring the house back on the market at a lower price. That would be very interesting, because obviously a lot of times what happens is that the listing lasts for 90 days. Let's say it expires, the sign comes down, but that person is still a seller, really. I mean, they haven't changed their mind. It's just that they didn't get the price they wanted. So the two things can happen at that point. They could either just say, "Oh, well, we're staying here for another couple of years. We're not going to sell. We're going to hold out for our price, what I call the anchor price," or they could put it back on the market at a lower price. And usually they would change to a different realtor as well, because first of all, they blame the realtor for the house not selling, and then they think, well, maybe it was the price too. So they change realtors, and then they change prices, and then the price, maybe the house sells at that point. So that is extremely interesting information that could be available to the public if the realtors wanted to share it. But obviously, for their own reasons, I'm sure that they would prefer to keep that information to themselves. And it may even be difficult to compile. I don't know exactly, but you'd think with the multiple listing service, the MLS service, they'd be able to do that. Because turning points are very, very important to try and pick up on. You've got somebody they've got a $1 million house, and their neighbor sold for $1.1 million a year ago, and they're absolutely not going to let it go less than $1 million, and they're just sitting there. If they could find out that listing prices were coming down and people were having expired listings, and houses were being pulled off the market and then remarketed at a different price, that might help them make a decision to change their price lower. And that's what I wrote about in the book. I said, if the right thing for you to do is to sell that house because maybe you're a baby boomer and you want to move on to maybe move closer to the grandchildren or just to rent and use the money from the house to fund your retirement or whatever, any number of reasons. Does it really matter that much if it's $1.2 million or $900,000 or $1.1 million? When that couple bought the house, it was probably only $300,000. So what difference does it make $100,000 here or there? It's a lot of money, I agree. But really, if it's a major milestone in your life, it's more important to get on with it. So the idea that there's a whole bunch of people out there waiting for that perfect price, that the maximum amount of profit on that house before they sell, which I would call seller's greed, could very well be an obstacle to their enjoyment of their retirement. And so, but that is usually what happens. People are reluctant to cut the price low enough if the market has turned in order to get out, because that's the other thing about real estate. And it's like a theater where somebody yells fire. Not everybody can get through the exit at the same time, and somebody's going to get trampled. So being early in that decision to cut your price is a very, very useful thing if somebody can bring themselves to do it. The other group that it's important is the probably usually younger people, but it could be older people too, but usually younger people that have just borrowed too much money and maybe something happens. Maybe they borrowed the maximum based on two incomes and one of them lost their job. Somebody gets laid off from work, or somebody gets pregnant or whatever, and they just can't afford that house anymore. And in that case, usually they do move more quickly, or if they don't move quickly, maybe the lender forces them to sell in a foreclosure. So we haven't had that, even in Alberta, which has been in a recession now for 2 years and counting. We still haven't had very many forced sales through foreclosures. I mean, there's definitely picked up from nothing to some foreclosures, but it's nothing like it was in the early 80s when there were many, many hundreds of houses in foreclosure. And I don't think it's because people haven't gotten into trouble. I'm sure there are some people that are in trouble, but I think the lenders are being very generous. And I mean, the lenders are obviously operating on behalf of themselves. They're not really working on behalf of they might pretend like they're working on behalf of the homeowner, but they're really thinking about themselves. They're being very gentle in terms of not aggressively forcing people to sell homes or foreclosing and then selling themselves. But they can change. The lenders, and this is one of the things about the home capital, to circle back to where we started, is the ripple effect, the contagion effect that everybody's worried about. The lenders can change their attitude, and they can say, well, if that can happen to home capital, that can happen to everybody in the housing mortgage industry, and then they might get much more difficult to deal with, which in the long run would be a good thing, because we've obviously gotten into a situation where the lending standards have been much too lax and much too loose. But the period of going from too loose to too tight is a very, very painful period for a lot of people.
We'll have more with Hilliard MacBeth right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're talking with Hilliard MacBeth. Hilliard, you said something interesting happened when somebody put their house up for auction in Toronto. They thought there'd be a landslide of people showing up. What happened?
Well, apparently, now this is just, second or third hand, but I've seen a couple of reports just today that either nobody shows up or nobody shows up and bids above the asking price. So the game that's been going on for a while now in Toronto is, and we saw this in 2007 in Alberta, and I actually was involved in this when we bought our house. This is exactly what happened. So what happens is the house is like worth, let's say, on the market, $1 million, to pick a number, for a single-family home in Toronto. So they deliberately place it on the market at $900,000, but they say, we're not going to accept any bids until the auction date, which will be 1 week from today. And so nobody's going to bid $900,000. Everybody knows that's too low. And so the question then becomes, how much over asking are people going to bid? And that's exactly what we ended up bidding, $100,000 over asking, because we were told by the realtor that everybody else was bidding over asking. And they actually, in our case, the one we were in, there were 9 people bidding on it, and we were the lucky winners. At least I think we were the winners. Although that turned out to be the peak, almost to the month of the Edmonton housing market was. So one of the signs of a peak of a market is when you get a lot of these auctions. Well, so what was, getting back to what you asked about, what I noticed was they were talking on Twitter about a situation that's happened several times in Toronto where either nobody shows up for that auction, which they were expecting. They deliberately priced it below the market, expecting a bunch of people to come in and bid. Either nobody shows up, or the people that show up are not willing to bid above the ask price. So then what happens is the seller gets all upset because the realtor had told them that there would be all these people selling at a higher price, and so they just basically decide not to sell. And sometimes the realtor says, well, don't accept those prices, because that, to use that example I had, the $900,000 price I talked about, that's way too low. And we didn't get any bids above that, so let's just hold on. So it's got to be very difficult for a lot of people. A lot of the sellers, the homeowners, and also even a lot of the realtors, they've probably never been through this before. This is the first, this has never happened before. And it has happened before, but for those particular people involved in it today in Toronto, this is the first time they've been through it. And so they don't really know what to do. And that would be something that's really, really weird. And so now the people that were expecting a bunch of people to show up at the auction and bid higher have found that people are not showing up and or not bidding high enough, and so they just pull it off the market. The other thing is, when you go to those auctions and you bid higher than the market, you have to have the financing in place. And I'm wondering if that's another part of the equation, going back to home capital, that if they were borrowing from a lender that's starting to get cold feet, then that may change the whole equation. It's that price at the margin that really matters. In other words, sometimes just $50,000 or $100,000 on $1 million home can make all the difference. And whether you can't get the credit, or whether the seller decides that they absolutely have to have that extra $100,000 profit, or they're not going to sell, for any number of reasons, the market can kind of freeze up for a while. And like happened in Vancouver, and I think still has happened with single-family homes in Vancouver. I think the condo market's really active, but single-family home market is pretty quiet still. So especially at the higher end.
Stats Canada just released census results from 2016. There are now more seniors than children in Canada. What does that do for long-term real estate?
Well, what I discovered in my research was there's very solid research that showed that once people reach the age of about 60 to 65, they tend to become sellers on average. Now, a lot of people are lucky enough they can stay in their home until they're 80, but for whatever reason, financial, layoff at work, retirement, illness, or death, on average, once people hit 60, 65 years old, they're much more likely to be a seller than a buyer. And so, the more and more people that reach that milestone, that StatsCan showed today, the more likely there are going to be more houses coming on the market. And they're not looking to replace that house that maybe they lived in for 30 years with a similar house. They're looking to downsize, or increasingly, actually, and you and I have talked about this before, but we haven't talked about it for a few months. Even a year or two ago, when I talked about renting to the people, I've got a lot of clients in this category. They all said, "Oh no, I would never do that." It's changed now, and people are actually willing to consider renting. There are a couple of reasons. One is financial; it makes so much sense. But number two is there's there's a lot more rental possibilities, options available on the market at sort of at the luxurious end of things. So people are willing to consider it. So that becomes kind of interesting. So if the young people can't afford the $1 million single-family home, and there's a whole bunch of 65-year-olds that want to sell them and either move to a nursing home or move to a rental, that's a negative for the long-term housing market for sure. And then if you throw on top of that home capital imploding, and then a bunch of lenders reviewing their rules about who they'll lend to and why, that's got the makings of a turning point in the real estate market in Canada. And it's from my point of view, I expected it. I've expected it now for a couple of years, so it wouldn't surprise me at all if it comes now. But I've learned to relax about the timing on these things, because a lot of times these things take way longer than you think. But then when they do finally start to happen, they happen much faster than you think.
Hlliard, thank you so much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. If you have any questions for us, you can email us at info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.